Whatever stage you're at with your trading, it's important to stop and gain perspective before planning your next move. Take a break from the charts and join in the discussion with our hosts, Jason Graystone and Akil Stokes, as they share insights, opinions and expertise on all things trading. Grab a coffee, pull up a chair and join the Trader Coffee Break.
All right, guys, welcome to the Trader Coffee Break. I'm Jason Graystone.
I'm Akil Stokes.
And this is our new lunchtime or coffee time show for you traders. And over the series of this show, we've got some real jam-packed value for you guys because it's something that's not quite been done before, as we just sit together and discuss trading topics. We're going to take a break from the charts. We're going to get away from the charts, and we're just going to talk trading, how our day's been going, what we've heard, what questions we've received. And we're really excited about this because we know this is almost going to be the stuff that you just don't see anywhere else. It's like fly on the wall stuff, two traders having coffee, break from their trading and just ranting about trading topics. So we're really, really excited about it. And the purpose of this show is to really not only give you insights to things that you don't normally see YouTube videos about. It's going to go deeper than that, but really the importance of this is getting away from the charts and doing a bit less. One of the biggest things that we see in traders, and some of the phenomenal prop firm owners we've conversed with and worked with in the past have told us that regular breaks are essential in trading, and doing less is actually more. So it's important to self-review, get away, gain perspective, and reflect on where you're at and where you're going, and that will really enhance your trading. So that's it. Welcome to the show. This is going to be a weekly show, right, Akil?
Yes, sir. It's I'm excited about it. What the coolest thing is that we're on opposite sides of the pond, but this is no different than us working in the same building. And you know, boom, time comes, head over to the water cooler, head over to the coffee maker, grab a cup and just converse and you know, about random topics in a raw type of sense, kind of just our opinions, our observations. And you know, hopefully as this show goes on, we can bring other people that gather around this the coffee maker as well. And it's just, I think it's an amazing opportunity for people out there to kind of get insight of real conversations on a regular basis that they probably don't have access to anywhere else. So I'm pumped for this. This is awesome.
Yeah, right. And although you guys, and we can do so much with this show as well. We can go deep on particular topics, but we can also bring on charts and things like that. We can bring on our notepads and do sketches for you guys if we need to. It's going to be really, really raw, and I think that's why I'm so excited about it. But also, it is going to be like that. We're just in the trading desk. You know, we're over at the coffee filler. We're just having a coffee, chatting, ranting, things that you don't typically see, and I think it's going to be great. So, although you guys are watching this on Premiere, so you're chatting in the chat there, from now on, or from the next episode, from episode 3, we're going to be running this as a live stream. So you guys, if you're watching and you're tuning in every week, you can actually chat to us and we can throw the chat on the screen and we can talk and engage with you guys as well. So I want you guys to feel like you're at the water cooler with us. You've got your coffee with us and you're having your rant, letting off steam. And we can all be in this together because it's really important. So the topic of this week is going to be around getting into trading. We might as well start right at the beginning. And yeah, right. So we work with a lot of traders. We've worked with a lot of traders over the years, and getting into trading. What was it Darren said yesterday? There was a massive incline in people getting into trading, right? And
for the last year, this is 2020 or 2021 now, it all runs together. But coming out of the COVID year, as I'm calling it, and I guess we're still in it, there was a massive amount of people, more than usual, retail traders that got interest in the market. And starting this year with you got the crypto buzz going on, you got not Bitcoin, but you got GameStop and all the Reddit stuff happening. I think it's brought a lot of interest to what we do, which is good or bad. Obviously when you're good at what you do and you do it the right way, trading is phenomenal. It's one of the best things, the best forms of investment out there. But if you go about it the wrong way, it could be pretty harmful. And I know we've both heard some pretty bad war stories, and I think a lot of that is because people just, they don't know where or how to get started, so they find the advice of the internet, and be careful what you read out there. It'll take you down some dark places, and I think it's a great topic of like, hey, what if I want to do this the right way, and I'm not just a reckless gambler, how should I get started? What is the first place or first thing I should do? What do you typically tell people?
Yeah, and absolutely, jokes aside as well, you know, there are legitimately people who want to get into it, and I think I agree, it is a great thing to get into, but there are ways and means of going about it, and you know, the purpose of this show isn't to kind of mock people doing the wrong thing. It's basically to educate you and guide you and give you some insights on whether it might not even be for you, or you might not be at the right stage for it yet. And what I found interesting, although we had 2020 and a load of people just went into trading, and you know, they're driven by the hype. We also saw a lot of people get burnt. You know, a lot of people lost a lot of money because they, if there's a 90% failure rate and and we have an influx of new traders, then 90% of those people are essentially going to get their finger burnt. So, why is that? That's what we really want to discuss. And what I'd love to talk about first is some of the problems that they face getting into trading, because some of them focus on like just an app. Some of them focus on like a forum. Some of them are kind of dubious about getting into it because they don't know how much time commitment they need. Some people have got different expectations to the results and the rewards in a short period of time. And then some people are just not technically minded, so they don't know the technicals. And then some people just focus on a strategy. So I guess what would be interesting to discuss is some of the problems that people face when they go into trading. And I think from me is the number one is the expectations. So chasing the shiny object, but expecting a quick result. And what I would say, what I've found working with them, and I know you've probably feel the same, what we see is traders have a very, very unrealistic expectation of what's achievable in a short space of time. But what's the killer? What's the kicker? Is when the real results come from like 12 months to 3 years, or 12 months to, you know, they kind of underestimate that, because they've overestimated the unrealistic, you know, the expectations in a 12-month period. They then underestimate what's achievable, and they end up giving up in the 12 months. You know, how many traders have we seen go on in the kind of second, third year and then go and get funded, and it's just incredible.
So I was going to say, there's so many traders that I speak to out there who are actually doing well for where they're at, but like you said, they don't think they're doing well because their unrealistic expectation is somewhere else. I know when I first got started, you know, I did the whole calculations of like, if I can make 20 pips a day and this and comp, like it was like I'd make $1 million in like 6 years. And then like, you know, once that ball gets rolling, it gets bigger and bigger. And you see a lot of traders that have this unrealistic expectation, and it's a whole other topic of why that is. It's that unconscious incompetent stage where it's like, you know, they're babies, and not in the sense of, you know, actual being a baby as a person, but like as far as they don't know what they don't know. They only know what they hear, and there's so much junk out there telling them, oh, 300% yesterday, I made 300% a month. And this goes back to another topic as well of just understanding money. But if you think about 300% a month, and if that's a realistic expectation, if you just simply take a few seconds, right? Take a coffee break. Think about what 300% a month consistently is over time. And ask yourself, one, is it in any way realistic? Two, if it were realistic and I'm the person making 300% a month, why would I be telling you about that? It's ridiculous, but we don't know any better. And then you'll see traders that are very successful. They're outperforming, let's say the S&P or something like that consistently, but they think they're failing, and they quit, or they try to do more, or they go to
Yeah.
a different asset class because they think they can produce more. And so many traders are on the right track to doing well, but they don't think they're doing well, and they quit before they have the chance to see those long-term results and prove that they're doing well. And it saddens me, but it's the reality out there, unfortunately.
I think a lot of that is just not having anyone to compare to, or like a decent community, right? To actually bounce off of and compare results to, not personal results, but just the process, and what everyone's going through. I think that's really important, because what they end up doing, as you say, they think, oh, I must be able to get more than this, I can't be doing that well. But in actual fact, all the good traders are probably in the kind of same boat. And then and it's no wonder that they think they're not doing well, because the way that it's advertised is, you can get rich quick, and that isn't true. Don't get me wrong, trading is an unbelievable accelerator for wealth because of the returns and the way that just the whole vehicle is amazing. But you have to step back. You have to do less. You have to. It's about small marginal gains and building and benefiting from that compounding effect. So that's kind of that's how we see people approach it in terms of expectations and time. You touched on conscious incompetence. I think the easiest way to describe that is like when you learn to drive, like before you learn to drive a car, you don't even know what a clutch is or you don't even think that those things exist until you get into a car. And now it's like, oh, these things exist. Now I don't know, now there's things that I need to know about in order to move this car. And then, and then you have to learn how to move it. And that's what happens when you go into trading. You download an app. You don't know the first thing about how to place a trade or order placement and all the rest of it. And then for some reason, people just persevere and start gambling money. You wouldn't drive a car on the road if you just tried to press the clutch or the thing. It doesn't work that way. You wouldn't get very far. The other things, technicals. I think a lot of people think that you have to be like some kind of mathematical whiz kid. What are your thoughts?
I thought the same thing, and you could say the same thing for fundamentals as well. I know we're both technically biased. It doesn't. I mean, the truth is they both work together. There's no one that dominates the other. But yeah, I was under the impression, and again, this is just from not knowing any better. Like I thought, from all the movies I saw, is that I had to go to a prestigious university. I had to have this economics degree. I had to do this and that to understand the markets. And I think a lot of people out there, especially newer traders that are kind of on the fence, I think so many of them are in that situation where they just don't think it's for them, where they don't think they're smart enough. Maybe they come from a different place. And I think that holds them back. And I know it may sound funny to some people listening, but I guarantee it's the truth, where if you don't have that belief that, hey, this is something an average Joe can actually do, you're never going to pursue it. And I think that's one of the biggest takeaways they get whenever they talk to me and you, because, neither of us was born with a silver spoon. The exact opposite. We come from situations where if you just look at our upbringing, we would never be traders or investors or business owners
or a business owner. We
would be, just regular people, and we were able to do it. And I think people see us and like, well, if those two guys could do it, we can too. But it's not. No, it's not advanced mathematics. You don't need a calculator or anything like that. I think it's no different than a mechanic, going off the car example. It's a tool set, and you have to know how to use the right tool in the right way for the right job. And that just comes with knowledge, that comes with practice, that comes with understanding the situation. But once you do that, I would say it's more common sense than anything else. And I think a trader that has more common sense, that ability to put two and two together, that ability to do A/B tests, compare and contrast, and find those solutions, they're going to be much more successful than the math whiz that perhaps
Definitely.
is overthinking the formula underneath the RSI and whatnot.
Yeah. Yeah.
So I think you guys should have a lot of confidence out there if you're not a math whiz.
Definitely, definitely. And you said, you made a great point. I always talk about like a new guitar or a better guitar doesn't make you a better guitarist, right? And a different basketball doesn't make you a better basketball player. You just learn with the tools you've got and make sure that it all fits together and it works for you. That's the number one rule, which goes on to kind of strategy as well, because a lot of people have got this misconception that it's all about the strategy. You know, you pick the strategy, you trade the strategy, and you know, I can see you shaking your head there.
If only we're that simple, right? If only we're that simple.
And don't get me wrong, I started out my journey looking for strategies. I was like, oh man, there must be something that's better than the other. But in actual fact, it's not that, is it? It's much more to do with what works for you. What's going to suit your lifestyle, and you're going to be able to maintain consistency with it. But second of all, something that suits your personality. You know, it's no good having a system that's you know, got where you're wrong 30% of the time, but on the days you're right, it's, you know, a 20-1 or 10-1. If you're one of these people that just has to be right, because that's definitely not going to work for you, right?
I don't think I've ever told you this story. I had a guy that I worked with. His whole goal, this was the only goal he ever had. He wanted to be a 99% trader.
Was this the dude with the RSI signal? With the RSI?
It might have, I forgot. It might have been, I forgot what it was, but I just remember everything was like, I got to have a 99% month. And I remember, you know, he hung around for a little bit, and like months later, I got an email. And he's like, Akil, I did it. 99% win rate for the month of whatever. The kicker is he was down for the month. The kicker is he was down for the month, and it's just he was so consumed over win rate and being right, and I understand it because we're in a way in society we're kind of, that's how we're brought up and taught. If you're right more, you're better. You get a better score on a test. You're smarter than the other person. But he refused to look at the fact that, hey, there are other things that make a difference. His risk management obviously was horrible. His wins, I think he was taking, like, as soon as it went to one pip up, cash out. His losses, you know, full of the hopium, taking big losses. But the funny thing is, I think he was still happy. Like the money, the return didn't matter to him. It was just feeding that ego and being right. Yeah. And that's it's scary out there.
I remember the similar story. I think there was a guy who was building some kind of stochastic based entry, and it was like 100% strike rate, but it was like 2 entries a year. And you know, if you had to run to the toilet on the day that you got your entry, and look, that's great if you can get 100%. But look, it's not practical, is it? That's not going to work for you. I wouldn't want to have all my eggs. Let's just say that you've waited 6 months without an income from your trading, and then on the 180 day or whatever it is, you get a setup, and your stomach goes, and you've got to run to the toilet, or you have to go to the doctor, or you get in traffic jam or whatever it might be. It's not practical, you know.
Imagine the pressure. you miss one trade a year, you're done. Like, imagine the pressure.
Yeah, feed the ego to be right all the time, but have the pressure on top that you can't miss it. Like, and you've got to sit in front of your charts all year for 2 opportunities, which is just, you know. So, well, okay.
You know what? Thinking about it real quick, just to follow up. You know, I think that's another problem that many newer traders have. They think they need to be right. Like they think they don't understand that, you know, many, and you can talk about fitting the strategy to your personality. You can fix it however you want, but I don't think they understand that many of the greatest traders of all time have win percentages that are 60, 50, 40s. And if that proves anything, it shows that you don't have to have this 80%, 90% win rate. I've failed to, at least in the professional traders I've spoken to, I don't know of anyone that is consistently that high. Not saying it's not doable, but just understanding that you're going to be wrong accepting that you're going to be wrong. It's okay. It's probabilities and risk management. It's not just you can have the greatest signal in the world.
Yeah.
It's going to be wrong every once in a while, and that's okay. It's nothing personal. Nothing personal.
I remember the time when I went to New York and spent some time on S&B Capital, and they said basically it's a 38 to 58% strike rate, like across the board, from all the different teams, from all the different traders, which is that's realistic. That's where you want to be. So guys, if you're I don't want to hear that, but if you're listening and you're watching with us, let us know. Give us a like if you've experienced that or you've had that thought. Give the video a like to let us know that you're one of those people, because I can tell you it's completely normal. Definitely normal. We've got such a great sample size of traders that we've worked with now. I feel like myself and Akil are definitely kind of qualified to kind of comment on that. So all right. So look, we've talked about that. What about some of the insights that we can share then? I guess we're pumped up on coffee. Let's talk about what people can do then, or maybe some insights on what the realistic expectations is. So first of all, the money, right? How much money do you need to get started? Now, I want to talk about the education, because I'm sick to death of all the comments in this YouTube video, probably asking people to invest money with me, giving you your WhatsApp, handing your money over to people and losing 500, 1,000, 2,000, 50,000, whatever it might be. First and foremost, that's not us, and that is not what we recommend you do. We recommend that if this is interesting to you, you empower yourself around the financial markets, you learn or get some insights, and that's going to be less costly. We're talking about a PC, any off-the-shelf PC, the cost of that, which you've probably got if you're watching this. What else? A trading platform, trading views, so cheap.
And at this point, when you're just starting off, you can use the free version of TradingView. Like when you dig into different aspects, you may want to pay for it. They have different memberships and whatnot, but you just need something to familiarize yourself with the charts. You can get a free platform. I'm not a personal fan of MetaTrader myself, just because I'm so used to using other platforms. But MetaTrader is a free one. The startup cost is really so low.
Really small.
Computer, internet connection, trading platform.
That's about it, right? And Excel, if you've got access to some kind of Google Sheet, which is like free, that's really all you need. And you notice that we're focused on the gear and the learning rather than funding an account. That's what I would say. Don't worry about funding an account yet. We'll talk about that in a later episode, about how much you need to kind of trade and kind of expectations on percentage returns. But just getting into trading, which is what this topic's about, you really don't need to, one, hand over money to anyone else, because that's definitely not the route you want to take. But secondly, it's not expensive. You don't need a fancy laptop, just something that's off the shelf at today's spec or within 2 years old. Your broadband is good enough, probably, unless you're somehow streaming this in the Maldives or somewhere else. Maybe a platform, which is, again, free. It doesn't take. So in terms of time then, and I know I did a piece on this in my podcast, but if you're learning to trade time wise, I don't know what your thoughts are, Akil, but I always believe that you should, if you're going in on something, although it's a marathon and not a sprint, to get momentum and to get encouragement and build progress, average an hour a day at least. I feel, because it means you're approaching it a bit more professionally. You're a bit more serious about it. You're going to get results quicker. That's going to encourage you to keep going. And whereas if you're dabbling around, it'll be very hard to pick up again. And you might get so far and then you drop it and then you have to pick it up again. And then there's so much to pick up that you don't bother. So I don't know what your thoughts are.
I agree 100%. And I don't know which of your podcasts you said this in, but it reminded me of what you said about book completion. Because I do the exact opposite, where if you make a goal where it's like, I'm going to read this many books a year, and you just make that goal, you're probably never going to achieve it. If you make the goal where it's like, hey, I'm going to dedicate an hour each day to reading a book, or I'm going to dedicate a chapter each day. Before you know it, you've gone through whatever many books. And for me with books, right, and this I had a good run of book reading, but once the kids came, that kind of sucked up the time. I would read, and I'd be inconsistent. I'd read one day, and then the next day or 2 days I'd go without reading. And before you know it, it's a week. And then when I come back to the book, well, I got to start all over. Because I forgot what happened. And I remember I'm reading a book, I think it's called Market Mind Games by Denise Scholl. And I have restarted that book about 7 times because every time I get the momentum going, I stop, I forget, I don't want to miss out. And then I start over again, and it's been years and I've made zero progress. And this is what you see, traders that dibble and dabble, they do the same thing where I watched a YouTube video today and then I did nothing for a week, and then they forgot the concepts they learned. They got to go back, and a year later they've achieved nothing. So I'm 100% on board with you, where it's like, map out your day, put your important stuff. You got to work, you got to spend time with the family, you may have other things you need to take care of. Find those gaps in your day, figure out how much time can I dedicate. If you can dedicate an hour a day, 2 hours a day, put yourself on a consistent schedule of doing that, and then be deliberate about what you're dedicating that time to. So just don't say trading, right? What about trading? Are you going to read up on the basics of the market? Are you going to look into technical analysis? Are you going to, if you're deeper in the game, are you going to look into a specific strategy? Are you dedicating that hour towards back testing? I think if you're deliberate with what your intentions are, you're going to head into that with a game plan, a goal, and you're more likely to achieve it than kind of like, hey, what do I do today? Trading, it's so wide range and do nothing.
Definitely. Yeah, and I'd like to touch on that a little bit more, but I guess having a block that is blocked out for trading is good in your diary, but as long as you've got a to-do list within that, so that you've got things to check off, and even if you get to that to-do list and you go, you don't feel like doing a certain thing, at least you've got other things to make progress on in that block of time. So 1 p.m. till 3 p.m. is trading. You go to the thing, and then you've got a big checklist to work through, and you just go, right, I'm going to do that one, that one, that one. And you're making progress in tiny bite-sized chunks. That's going to be much more beneficial. Consistency, small, momentum. That's what you want to build, not these kind of big. It's binging, isn't it? It's binging. Yeah, it's like that's not going to work.
Tell you, it feels good to hit that. I know you're the same way. When I got with the app I use, you hit that check mark, it gives me a little ding.
Yeah,
just crossing it off.
Release the endorphins.
I feel. Like I want to do more. I want to get that next ding. I think people underestimate that. I think people set their goals so big, and it's good to have big goals, but they don't break it down into the right size chunks. It's like going to going to an all-you-can-eat buffet and just piling as much on your plate as possible and trying to eat it all at once. You get sick.
You do that. You just cause procrastination, because you've either got overwhelm or you've got, you're doing something that you've got no direction in whatsoever. So it just ends up not being important to you. That prioritizing it becomes not important, which is why you face that. So, all right, just to finish off then, let's have approach. So if we were going into trading, if someone was listening to this, and by the way, if you guys can think of anything else that you struggle with, or any of your opinions on anything we've just covered, I'd love to hear your comments and get your insights. We'd love that. But if you are a new trader and you're listening to this, first of all, congratulations for finding this show, because this is going to be great for you, right? This is going to be raw and real. Like this isn't edited, nothing.
You know what? Write it down right now. Your to-do list. You got it every week, same time, same place. That's your boom. There's your 30 minutes of your hour to this.
That's your priority, right? Book this in every Thursday. You're going to be tuning in with your coffee and joining us, talking about all things trading. And we're going to be covering mindset and everything. We're going to be doing everything on this. Any topic we're going to be going through. But just to finish off, if we were to give advice to a brand new trader, so they've just found out what we do, which I get that all the time. You're a trader. Oh, if I wanted to get into that, what would I need to do? Brand new canvas, doesn't even know anything about the markets. What would we say? Now, I would arguably say, so I'll go first. I would say just learn some basic terminology, like basic terminology around candlestick patterns and the orders and pips, and just learn the OHLC terminology and just learn the basic terminology around trading. I think that's just the basic terminology. So put some time into learning, not everything, but just to do with the price, the volatility, maybe some indicators, maybe some average true range, things like that. Just learn some basic terminology around price, and then I would go into structure. What do you reckon?
Yeah, I would say the same thing. I think if you don't learn that basic terminology, even if you think you don't need it, and I think that's a bigger problem, is people think they don't need the foundational stuff because it doesn't, they don't see it as a direct path to making money, but that goes back to the expectations. You need to know it because you're going to be lost moving forward. When you start getting into the advanced stuff and you hear people talking about pips and structure and open high low closes and this, and you're not going to know what it is, and you're going to be lost. So that would be my choice too. I would say this, and I think this is you touched on this earlier, it's maybe not trading specific, but having the right mindset about or being, I guess, being in a good financial situation yourself, or maybe not being in a good financial situation, but knowing how to tell if you're in a good financial situation and how to get yourself in one. Because I think that goes to, if you're bad with, if you're horrible with your personal finance, you don't know how money works, you don't know how to use money, you're just going to repeat those flaws in the market with money. You're gonna, if you're reckless in your spending, if you're reckless in your spending in real life, if you go into the store and you see it, you buy it right away, you're probably going to be one of those traders where I don't need to learn, I'll just start investing right away in the market and blow it. Where if you're someone that understands, like, hey, I need to plan it out, and all that fun stuff, you're probably going to have a better approach. So my first answer is exactly what you said. I'll follow up on that, but I would say just learning how to understand price. You'd be shocked, including myself. I was a so-called trend trader who couldn't identify a trend, and it took me a long time to realize that was a problem. Where it's like, I think someone asked me on the internet, "Hey, is the euro dollar bullish or bearish?" And I'm like, I didn't know, and I'm like, wait a minute, that's a problem. I should probably know that stuff. I think the ability to understand what you're looking at and make the prediction and the understanding is more important than any strategy or specific entry. That's key.
I neglected to. I just assumed for a moment that anyone listening to this show or watching this show has kind of heard of either you or me and just knows about personal finance and knows how important that is before going into this. But I guess that's absolutely a valid point. And definitely first. Definitely that first. Definitely that first. And you can go and check our other channels. The links are in the description for more advice on financial education. But definitely that. And then finally, the strategy. I just want to talk about the strategy because a lot of people go and they look for the strategy. Look, pick something, learn price, pick a strategy, any strategy. Don't chase one and then go on to the next one. Just pick one, learn it in and out, inside and out, so you can memorize it and you memorize the rules of the strategy. Once you've got that, you can really get connected to the numbers. If you're doing some testing, go out there, look at it on the charts, demo trade it. Just don't focus on funding an account and placing a live trade. And I know that that's what most people want to do when they get into trading. And don't get me wrong, that is the goal, but it isn't something you want to be focused on getting into trading. Just enjoy the process of learning how to read the markets, picking a strategy that's already been developed by someone, because if they were developed and they're out there in the public domain, chances are they're profitable, right? It just doesn't mean it's necessarily going to be profitable for you, because that's when you have to take it, mold it, make it suit your life, your personality, on the trading time frame that you need. And then making a system like that profitable is one of the most rewarding things in trading. When you finally break and you're like, wow, this is it. You're really on something, and that's when you get the confidence and that all comes later, which we'll discuss in more episodes. So yeah, look, man, this has been a great chat. I do want to just kind of finally say that if you got something from this podcast, let us know, or from this show, let us know. But also, trading is a marathon. It's not a sprint. And if you was going to train to be an NBA player, you know, you wouldn't just be able to pick up an app and do it. It will take a little bit of learning. It takes a little bit of work ethic. It takes development of a skill. And Akil, like, you work with athletes, man. It's so similar, isn't it?
It's the same thing. I tell you what, we can end on this. It's perfect timing. The landscapers are hovering around the window.
Amazing.
But yeah, it's the same thing we tell every freshman coming through. It's very similar to trading, where we get a freshman athlete that comes in, and I tell them the first year, I'm like, look, just get through the first year. Like, there's no expectation. You're not going to be a star athlete. You're not going to break all these records.
Just survive.
Because the first year, all we're doing is we're teaching them concepts. They're practicing those concepts. They're in the weight room. They're just getting their body stronger. And it could be very frustrating for them as well, because you got to think many of these athletes are the best coming out of high school. But they do that, they build that foundation, and then when they come back next year, after they've done the ones that have done things the right way, that's when you see that exponential growth. We had a girl this year that came in, not the greatest athlete, worked her behind off all last year. This year, one of the best athletes in our conference. And she just worked, and then all of a sudden it just popped. And everyone's like, well, how did she get good so great or so quick? And it's like, well, no, she didn't. She invested a whole year of struggling and training herself. And now she's reaping the benefits. And trading is no different, man.
And that's what we're seeing with our traders, right?
Oh, yeah.
Yeah. Amazing. All right, guys. Well, look, if you enjoyed this show, give us a like. Let us know in the comments what you'd love to see us talk about during our coffee break. And until next week, remember this: doing less is more. Have your breaks, get away, gain perspective, and we'll see you next week. Take care.
Thanks for joining us for the Trader Coffee Break. Be sure to like this video, subscribe to the channel if you haven't already, and don't forget to hit the notification bell to never miss a live discussion. Follow our hosts on social media. And remember, do nothing to gain perspective on everything. See you next week.